Hi, my name is Jonathan and I'm from Meerkat. Today we will be sitting down and having a conversation with the CEO and founder of Meerkat, Mr. David O'Brien. Mr. David O'Brien, welcome. How are you doing today, man?
Thank you, Jonathan. I'm good. Great to be here.
Welcome. So today the topic that we will be covering with Mr. David O'Brien will be regarding loans and affordability. So when it comes to loans and affordability, a lot of people actually do not have a clear picture when it comes to that. Now, with the vast experience Mr. O'Brien have, he's going to elaborate more on if someone applies for a loan and they get declined. Do they often get explained what is the reason for them not qualifying for that loan?
Thanks, Jonathan. That's a great question. So I find that the average South African understands credit score, okay, but there's details in credit score that they don't fully get, but they do understand that a bad credit score means no loans, basically. What a lot of South Africans don't understand is affordability. So the National Credit Act demands that before a bank can give you a loan, they have to confirm you have the ability to repay it, okay, and that's really important. So as a result, if you've applied for a loan yourself, you know that you have to do, you tell them your income, you do your expenses, and then they will assess you for the loan, all right? That's the affordability calculation. A third of South Africans are being declined loans because they can't afford to repay them.
That is the next topic that I want to touch on. Could you explain some of the reasons they get declined for the loans?
To the previous question, you said often the banks are too busy or it's a digital process, so the consumer doesn't always understand why they were declined. But like I said, there's two major elements into a loan application. There's the risk to the bank. Will the guy repay the loan? Or there is affordability. Can the person afford to repay the loan? Those are the two major reasons. And the banks can decline you on either. Like I say, about a third of people are declined on affordability, and then another third plus can be declined on risk. So actually, there's quite a lot of people get declined loans. There are, in fact, over 9 million people in debt distress in the country. That means they're more than 1 month behind on some of their payments. Chances are they will struggle to get a further loan, which is why a lot of people are in a cycle of applying for many loans. But then the funny thing is, the more loans you apply for, the more damage you do to your credit score.
With all of that being said, David, what would you advise someone that is being rejected? Like, how can they improve their credit score in order to get approved for a loan?
So again, linking back to the two reasons, if you're being declined for affordability, you could be a candidate for debt counseling. And the reality is, for many people, if they are over-indebted, as in they cannot afford another loan, often either they need to get a higher paying job or they need to look at debt counseling as an alternative. Now, in today's economy, it's very difficult with the high unemployment to get a better paying job. In fact, it's going the opposite. Companies are not paying bonuses, they're reducing salaries. So in that instance, if you're not getting another loan and you're needing it to pay for household expenses, you're perfectly suitable for debt counseling. And the technical definition for over-indebted is negative affordability. We can then help you by giving you instant relief. On the credit score side, if you're not getting a loan because of poor credit score, then stopping applying for loans is the first thing, which seems crazy. Making sure all your payments are up to date. There's another angle which is called credit utilization. If you have hypothetically 50,000 Rand available on your credit cards, if you're using 49,000 of that, your credit utilization is 98%. Banks don't like utilization rates that high. So actually shutting down some credit cards, reducing your access to credit will improve the score. Problem with credit score is it takes about 2 years for improvements to come through. So it's a very slow, gradual process. And if you make a mistake, miss some payments in a given month, it very quickly goes backwards. So it takes a long time to fix, but it's very quick to damage.
So you would say that having a proper credit score is very essential to actually getting approved for a loan.
So there are plenty of companies at the moment, they're advertising on television using barking dogs and talking dogs that help you understand your credit score. But the funny thing about credit score in South Africa is you don't have a single credit score. You actually have a different credit score at every bank. Now they will tend to align, but they can be different. So if you register and you get your credit score from one of the credit bureaus like Experian, that may not be the same score that ABSA will use if you apply for a loan at ABSA. So understanding that you have different credit scores is important, but they're all looking for the same thing, which is good behavior. So can you make your payments on time? Do you have any judgments? Have you missed loans in the past? Have you let loans prescribe? All of these things impact your credit score. And like I say, if you've not paid a loan at ABSA 10 years ago, ABSA are likely to remember that.
100%.
So they will have a different perspective on you from risk to, say, another bank. Affordability is always on you. So that doesn't change bank to bank. If you give them your disposable income, your household budget and expenses, you will be the same affordability wherever you go. And like I say, affordability is often another reason people are declined.
One of the things that I've found out when it comes to home loans is that a lot of people are trying to figure out why they do not qualify for home loans. And also, is there a specific credit score that you should have in order to qualify for a home loan? And what is that credit score that you think you should have in order to qualify for that home loan? Can you please elaborate for me on that?
So that's obviously a very big question, Jonathan. I think when it comes to home loan, a home loan is a 25 or 30-year commitment. So the banks need to be very clear and understand that you can afford to make 25 years of repayments. So credit score is a thing today, but actually your employment, your income, your future employment, your earning ability, the particular property you're buying, all of these go into the mix in a home loan application. But the biggest one the bank will start with is affordability. So if you're applying for a loan and you need to pay 10,000 rands a month for that loan, the bank wants to be fully sure that you've got 10,000 rands available in your household budget to meet that. Now, obviously, if you've been renting and you're buying a house, well, that's the first kick at your affordability. So if you've been renting for 12,000 rands a month and now you want to buy a place for 10,000 a month, the bank can see, okay, that expense can actually cover. Then they want to check, okay, they can see that you've managed to pay that rent on time, each month. So affordability is a major part of the component. Your credit score, because you're buying a house, the bank has a security on that house. So on some level, it's a little easier for the bank to give you a loan on a house because they have security, but obviously they need to know a good credit score. But it all boils down to the bank's appetite. Do they want to grow home loans? Is it an important part for them? Are they growing actively, full stop? So from time to time, different banks run special offers. They're more open to applications, etc. So it actually does depend. But when you're applying for a home loan, there are agencies and intermediaries you can use who will apply to multiple banks on your behalf. And often they can come back with good offers and good rates.
So David, a lot of clients, obviously, when they sign up or when they make an application to a Meerkat, they would like to find out if they are eligible to qualify for a loan. And what would you advise them in such a case?
So, again, because Meerkat has a big name and a good name in the industry, we often get clients coming through applying to us for a loan. Obviously, we are not a credit provider, but the question they really have is, I want to buy a house, I want to buy a car, will I get the finance? Okay. And for many people, they may have applied and have been declined and they don't know why. Or they know that they're planning to buy a house in a year's time and they want to understand what do they need to do to get there. So in response to that demand, we've generated a simple advice product, if you will. It's a report you can get, and it just gives you a sense of today, if you were to apply for the loans, how likely you are to receive them. So it helps customers understand, can I get that loan, which is the question they're asking. And it brings together the factors that the banks look at: credit score, affordability, credit utilization. And we summarize it in simple language for the client with then some tips as to how they can move forward from there. So we're hoping that people will use it to not put in an application to a bank, but actually to check if they're creditworthy first. And then with the knowledge, they can then decide if they need to wait a bit or apply at that point.
Thank you so much for the clarity on that. And there you guys have it, ladies and gentlemen. This is Mr. David O'Brien. Thank you so much for sharing your knowledge with us, as well as your time and your patience, man.
Thanks very much, Jonathan. Appreciate it.